the umbrella.
Good afternoon, everyone, and welcome to Market Wrap. I'm Neil Cavuto. Bill Griffith has the day off. Some good news and some bad news today. Let's begin with the latter so we can get happy afterwards. Well, all it took was a strong report out of the nation's purchasing managers, and the next thing you know, bonds were getting battered. Sounds strange, but listen on. Jumping a surprising 5 points for the month, the National Association of Purchasing Management came in at a more than 3-year high in May of 56.3. Virtually no one on the street was expecting that one, and it all but ruled out any near-term additional easing by the Federal Reserve.
I think what they need is much, much weaker data than anything we've seen today or really in the last few weeks. Money supply's a necessary but not sufficient condition for them to change targets or policies, and I don't think they've got the confirmation of substantial enough data on the economy to ease policy right now.
Now, as you know, an improving economy always brings with it talk that inflation will be coming back, something the bond market hates to hear. Just look at this. The long bond on the day getting hit for about a 20-tick loss to 101 and 7/32, with the yield hovering closer to the 790 level than the 780 level we had been at. The shorter end getting hit as well, with 3- and 6-month bills backing up in today's $23.2 billion auction. Taking a look at how the 3-month fared on the day, it came in at an average yield of 375. Exactly what it was last week, but here's the thing. It had backed up about 10 basis points from where we were just Friday, with the bid to cover ratio a healthy 3 1/3 to 1. On the 6-month side of things, here's what we were looking at. The rate coming in at 390, again exactly what it was last week, but again a backup of about 10 basis points from where we were on Friday. Well, stocks proved to be resilient in the face of the bond market's fall off, so resilient that it appears that the Dow will crack the 3,400 mark for the first time ever after the closing bell. The blue chip indicator was down sharply in early trading, but managed to fight its way back into positive territory in mid-session. Some buy programs helping out there. Let's look at the unofficial closing numbers from Wall Street, take a gander at what we're looking at. The industrials up to what appears to be the 22nd record of the year, 3411.39, up about 14.5. It looks like the likes of GM, Procter & Gamble, and Aluminum Company of America at least throwing their weight behind the Dow's gain today. We'll get to the particulars a little later on. The transport's up 3 3/4 points at 1373.88. Really credit a lot of strength in the rail issues there. And the utilities down about 0.5 point at 212.94. Elsewhere, here's what we were looking at when we break everything down. 922 gainers, 766 decliners, 560 issues, or 570, I should say, unchanged. Rounding out the market averages, the S&P 500 picking up 1 2/3 points. The Amex actually slipping on the day. The NASDAQ up 2 1/3 points. Microsoft helping things out with a 3 1/4 point gain to 124 1/4 there. Alan Bond of Bond Procope Management sees a summer rally ahead for stocks. He says that there's an underlying confidence on Wall Street, buoyed by the announcement of stock buybacks by big companies such as Philip Morris.
Those are the kinds of signs that we want to see.